Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, September 28th, 2018. I want to do a second video today for members of the site. Let's look at, we want to focus on gold. It was over the years probably get more interest on gold than just about any other security, even the broad market. So we have the trade on two active trades right now, official trades. That's GDX and PPLT. So what we're going to do is look at gold. Obviously, that'll determine where the miners go, and then we'll look at the other metals. I want to point out, which I will here in a second, that the other precious metals, silver, platinum, they've been holding up relatively well compared to gold. There's something out there right now, whether it's natural market forces or something else, that have been really pushing and holding gold down relative to, again, to those other metals, to what's going on in the U.S. dollar and the euro. I don't know if China's a big seller. Something's happening, but either way, let's just, we'll take the technicals for what they are. So this is just a 10-minute chart. I posted this in the trading room a few minutes ago. I just wanted to highlight, well, a couple things. Number one, that we took out, we've already erased most of yesterday's pretty big losses. This is where there was a close the previous day right there. There was that gap down in gold. It traded lower most of the day. This was yesterday's close. And as you can see, nice reversal so far today. However, for the very near term, we're coming up on some resistance. You can see these levels I have marked here. It's around just under 1213. We'll call it 1213 to be safe. There it is. A lot of reactions there. So my guess, unless yesterday's move was a false, just a whipsaw signal. And I also need to get to the euro here in a second and tell you, because that's really, yes, you guys know, I care more about the direction of the dollar than I do really of gold. I know gold will follow if I get the call right on the dollar. There may be some temporary, forces pushing it down, whatever it is, liquidation of funds, individuals. But so we'll get to that in a second. So there it is. So very near term, just watch this 113-ish level on GLD, because again, you can see the reactions there. It was sort of a bigger picture if you look at it this way, a shelf of support that was taken out yesterday, and so now we're back testing it from below. Obviously bullish if we can get up there with conviction, blast on, clearly put 113 in the rearview mirror. And then regarding we need to look at futures too, gold futures. Jump over to a 1 hour chart. There's that same comparable resistance level. And again, what I'm looking at, a lot of reactions on this level here, and that's about 1197 almost on GLD. I'm sorry, GC, gold futures. This is a 60-minute chart. So you can see it's a pretty well-defined trend line. We broke below it yesterday, and we rallied back to it. So while it would certainly help our trades on the miners and platinum, if we can blast on through there, I expect a little reaction, a little hiccup there, and hopefully come on through. So before I leave this chart, and I'm going to get to the currencies in a second, I want to mention something that I probably should have mentioned this before, and I'll mention it now because it's still a possibility. Been eyeing the charts of gold for a while, and as well as GLD, and this is a daily chart of gold futures. And when I look at, you guys know I love to see, especially on the daily time frame, divergent lows, positive and negative divergence to help confirm highs and lows, major trend reversals, that is. But as I always say, they're not absolutely necessary. Sometimes it certainly helps to make the case, but sometimes securities reverse without divergence on the indicators. But if we do happen to get another thrust down, and that possibility is certainly there in gold, this is again gold futures on a daily time frame, just to undercut these previous lows right here. Doing so would set up some nice bullish divergence and really set the stage. And it would also help to wash out. It seems, gold has really been trading sideways here for a while. So there's some people that just won't let it go. And we might need that flush out move. I can just tell you this: if it happened, just like that scenario I laid out a few months back in the euro US dollar, that's exactly what happened. That undercut the previous lows, a support level, put in bullish divergence, and shook out a lot of euro bears, or trapped some euro bears, dollar bulls. And anyways, that just helps to make for a more lasting bottom because what it does, it flushes out the weak hands. Stops will be cleared. People capitulate if that low is taken out. More shorts will pile in, thinking the gold's going lower. Again, it's two-staged, two-pronged thing if it happens. Number one is the breakdown, undercut the lows, and of course then you need the reversal, and doing so would confirm, as I showed down here, these potential bullish divergences. But as of now, that's only one possibility, one scenario. Let's look at the euro and see what's happening there. All right, there's gold. There's the GLD 60 minute. Before I get away from this chart, see what I'm talking about here on gold. Here's give me a clean board here. There's the recent lows. Yesterday we came within roughly, if I can hit that candlestick at the bottom, about 0.7%, so less than 1%, 0.7% within hitting that previous low on GLD. But now when I look at silver, I can see not even close. Look, we're well off that low. Yesterday, we got somewhat close to it, but one over 1%, 1.17, and look where we are now. Silver's looking a lot stronger, as is platinum, which is our official proxy. Here was a low in platinum back here. And so you can see yesterday we were not even anywhere close. We were, that's a bad number, 6.66%. But either way, that's the point I'm trying to make. So the outlook for the precious metals is good, and there's just something keeping gold down. But I'm watching these others, and again, I go, that's why gold's not an official trade. I like the chart of platinum better, and so far so good on this trade. And where are we at here? Whatever. We're positive on it. And again, we need to take out this trend line. See, we ran up to that trend line. We've had several failures. So a punch above there should pretty quickly get us up to that first target. The actual resistance level is at 80.28, but I have it the target set at 80.22, 80.22. And I don't like to try to squeeze out every last cent. Sometimes sellers step in. Oh yeah, one more thing I want to show you on gold. GLD. What I'm not crazy about, and this would also set the stage for that scenario that I just laid out. Let me draw it again here on the GLD chart because I know some of you don't have access to the futures. So this would be that washout move. Come on down, undercut the previous lows in GLD, just like I showed you a minute ago in the futures, put in that divergent low. And I'm also, like I said, when I look at this, and I made mention in the trading room today, what I don't like, you guys, if you followed me for a while, I like to use the PPO signal line, that's the 9 EMA, which is the lassitude across, as a trend indicator. And so effectively when that white line here, the 9 EMA, is above the zero line, that's this dotted line in the middle, the trend is bullish. So across there, total trend was bullish, had a back test there successfully, but here it said no more. It said get out, cross down below. So, it kept you in here, even though it was a sideways trading range. And gold, keep in mind, has been choppy. This thing works very much better when it's trending. I've said this too in the past. I ignore it when we're in a sideways trading range. You don't always know that when you get the first signal, but once you're in a clear trend, it does a good job. So from here, and so far, it's told us the trend in gold is bearish. It's been very clear to that, below that zero line. And as I said, that zero line often acts as support when tested from above with that 9 EMA on the PPO, and it also acts as resistance when tested from below. So as you can see, if we zoom in close, let me get all those annotation out. We just recently had a bearish crossover with a rejection. It was actually the PPO line itself was rejected right at the zero line, and the PPO is now turning down, just made a bearish cross. So that's not I'll just say a call for what it is. It's not a good technical development. I always say these aren't buy and sell signals, these indicators. They're just helping you kind of figure out the trend where things might be going. So, it's certainly possible this thing can cross. The lines sometimes give you a whipsaw signal and cross up. But I wanted to mention that. I'm not crazy about the posture there. Now, on the weekly chart here, I do like what I see. Started out way back here. Here was our last bull market in gold. The bear market started in 2011. I still maintain that the bear market in gold ended back in late December of 15. Right here, we had big, strong, clear, positive divergences. Everything I like to see. And so far, the trend is up. We've made a series of higher lows. Now, what happened? We don't have a clean. We can't say definitively we're in a bull market because an uptrend is defined as a security making a series of higher lows and higher highs. What we have are really, for the most part, three equal highs here around the 130 level. But we do have the higher lows so far, as you can see there. So there's somewhat of an uptrend, a larger, bigger picture, really a sideways or a deer market in gold. But again, we're still well off those 2015 lows, and we're still off that late 2016 low. Um, Now that I think about it, it looks like annual. You could put annual cycle lines. That was December 16 we peaked, December 17 or we bottomed, December 17 we bottomed, and we're not far at the end of the year. And that also might mesh with that one more low to put in a divergent low scenario. But what I was going to get at, I see the PPO curling up here. That's good. So now the PPO line has turned up. The slope was negative, meaning going down. It's starting to flatten out or slightly turn up. So if we get a bullish cross soon, that would be that would certainly help. And also, I've mentioned this before. If we are in a new bull market in gold, you want to buy oversold readings. They're usually fleeting, usually one and done. The last time, if you stepped in and bought gold after the the bear market ended, you did very well on that run. And so we're also coming off oversold readings, but there's work to be done. So those are the things I'm watching, and oh yeah, let's get to the euro and maybe wrap this part up on the precious metals. So, all right, I was on a weekly time frame there on gold. We'll just GLD, so we'll just roll over here. If you haven't seen my analysis recently, this is the bigger picture. This is a weekly chart of the euro US dollar, which is my proxy, my preferred proxy for charting the US dollar. And that's because the euro is 60 something percent. It's over 2/3 of the US dollar index is the euro alone. Then you have the Japanese yen at a distant second weighting. Everything else so far behind it doesn't even matter what those currencies do. Here you go. This is a multi-year basing pattern right here. We had a uh, breakout right there. Let me color it with this line, breakout, back test. And we pushed up here, we put in a divergent high, see the negative divergence after the divergent low there. And we're come back in, we made another back test recently at the lower end of that, the top of that former basing pattern there. So that's the bigger picture. We zoom now to the daily chart. And I mentioned just the other day, we were up here. Actually, we had just broken down on the 60-minute chart, and I said we may be coming in for a back test to here, this trend line, and even possibly we may go down here. This is still very key support. This is, I have two lines in close proximity. The lower of the two is about 115.279 on the euro US dollar, but again, I've harped on this level quite a bit in the past. Very, very well defined, very significant level. That was our bear trap, little flush out move. And so now we came very close to it today. We didn't quite hit the upper end, but we had a pretty strong reversal so far. We'll look at the 60-minute chart in a second, but excuse me, we may come back down again. Look at Here's the PPO. We may still hit that. Looks like a bearish cross there in the PPO. But I didn't see any divergence or anything that tells me. So I think right now, worst case, maybe another thrust down in the euro US dollar, which will give a pullback in gold again. We may fail here at those levels I just showed you. I expect at least a minor pullback there, but we'll see. So that's it. Watch this level, and let's look at the 60-minute chart and see what happened and see if it gives us any clues. Pretty strong reversal. I also, was thinking this before it even happened. As I saw this today, early this morning, we're heading down. That's such a well-watched level, and here it is on the 60-minute chart. There's those previous reactions that it wouldn't surprise me, and it didn't so far, to see the buyers step in early when so many eyes are watching a level. And that's the exact reason that I cover my short trades above support, and I sell my long trades just below the resistance level where I think a reversal is going to happen. Because if too many eyes are watching it, they'll step in early. And so far, that's what happened. So you can see a pretty strong impulsive reversal there. And this is a 60-minute chart. And again, this was the warning that we're going to have a correction. We've had a pretty strong run, but we had on the 60-minute this negative divergence here, that divergent high. We went on, then we had an impulsive breakdown below the uptrend line, back tested it, and boom, there it is. So where do we go from now? I don't know. I could flip a coin. I'll be honest with you guys. Maybe we do come back down, fulfill another tag at that 115, 306 this level. Also those lines on the daily chart I just showed you, or you know. And it could happen. It could take a while to happen too. We could have another thrust up and then a move down. Just trying to say that the near term, I'm split. I am still longer term bullish on gold. Make no mistake about that as of now, because everything that I've been looking for is still happening on the charts. So it's just this near term is a little bit iffy right now. And all the better if the euro explodes off here, didn't even come in for full back test, the buyer stepped in and keep running it up. Gold comes through that resistance, those resistance levels I just showed you on GC and GLD, all the better for the case of gold. It just shows now that there's starting to be a voracious appetite for get buying in gold, and that would even help. So those are levels to watch, and certain technical developments, if you will, to watch for, such as impulsive buying that just keeps smashing on through all these resistance levels. I was considering covering some other securities in here like oil, nat gas, cover some sectors. We'll keep this one simple. I want to keep these videos, try to keep them around under the 15-minute mark, definitely under the 20-minute mark. So I'm just going to wrap this up with gold, GDX. So we'll just have this as a precious metals video. Yesterday in the trading room, we were right here. I pointed out two technical events. One that was a given or certainty that we were back testing this trend line after this breakout. So we had a breakout and a back test, healthy, normal behavior, especially the fact that we're following through to the upside today. Miners are up a respectable 1.42%. That's run of the mill for GDX, by the way. You got to keep that in mind. This sucker can move 5. I've even seen miners move 10% in a day, and that's a sector. So I've seen individual stocks move 20% or more in a day. But normally this is just a run-of-the-mill move so far. But it shows you that we successfully back-tested. And I also laid out a potential scenario. We'll still need some work to be done of inverse head and shoulders pattern. Let me draw that out for you on a clean board here. Here we go. We'll use this one. Inverse head and shoulders patterns are bottoming patterns. They come after a prolonged downtrend, so that fits the bill there. This would be your left shoulder right there. This would be the head. And then this could be your right shoulder. It's perfectly normal to have downward or upward sloping necklines. This is what you call the neckline. And so the trigger for a breakout for an inverse head and shoulder, should this right shoulder continue to form and get finalized, would be a breakout above the neckline. And then the measured target on a head and shoulders pattern, you take the widest part from the head up to the neckline and you add that to where the pattern broke out. And you can see that would bring me, you can see the shaded box. That was there because that was a very well-defined, the bottom of a very well-defined, at least on the bottom, yeah, and even the top, a trading range in GDX, and that's when you had the breakdown, the impulsive selling, and that's also would be, my preferred swing target right now. So there it is, and that would that IHS would, if it breaks out, the measured target should bring us right around there roughly. I just gave a rough estimate, but I'll say this too: when I take these pattern measurements, whether it's any type of chart pattern, most of them have measured targets. You can use different rules to do that. If I use the measured targets, but then I look at key support and resistance levels, it would be my price target if it gets there. And if the level comes first, in other words, the resistance level, that's where I would take profit. So what I'm trying to say, if the IHS measured right above there, I wouldn't be holding out for the IHS target. I would be, closing, looking for a bounce or a pullback there around 2077 on GDX. So that's it. Those are the levels to watch. And like I said, so far so good. GDX 60-minute. Let's just look at how this looks for our trade. There's a downtrend line. So far, we came very close to that first target and pulled back. And you can see I have a support zone here, which we undercut slightly yesterday, but we're above it now. A little bit sloppy trading, but like I said, I don't see anything in the charts at all to close this trade earlier, to second guess it at this point. So it still looks good to me. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.